This is your morning brief for Tuesday, February 5th. Alphabet, formerly Google, beat top and bottom line but loses 2.2% in pre-market. Earnings per share came in at $10.91 versus $10.86 for the estimates. Revenue grew 21.8%, and that's up to $39.4 billion, beating the estimates of $38.9 billion. I see no issues with Google. I don't know why it would trade down like this. Some analysts did cite overspending going forward, too much capex. It just put a little bit of fear in them that they're going to overspend. But I don't have a problem with that either. I think if you're earning a high rate of return on capital, which they are, in fact, the return on capital has been improving the last couple of years, put as much capital to work and, exceed your cost of capital. That's what you're supposed to do. I see no problem with that. I feel they have opportunities to put capital to work. So I think the street's got this wrong. I mean, it's only down 2.2%. It's not a huge move, but I would be buying on any weakness. Okay, Clorox shares were up 5.7% yesterday after beating the street, posting $1.40 versus $1.30 estimates. Revenue only grew 4%. They did say tariffs will only hurt the profits by about 5 to 7 cents per share for a full year. So, that's a standard, decent report. Shares jumped 5.7%, which seems a little bit much for an okay report. Although shares have been down, so maybe this was just getting back to where it should have been, before the earnings estimate. I wouldn't put too much stock in this jump. It's a good company, high quality. It's the kind of company you own for the long term. I just don't see any more short-term move there. It had its move yesterday. Buy for the long term, sure. Okay, Church and Dwight shares dropped 6% in pre-market trading after missing estimates. Now, it only missed by a penny. Earnings came in at 5.7% versus 5.7. Start that one again. Earnings per share came at 57 cents, and estimates were 58 cents. So they missed by 1 penny. Full year revenue grew 9.8%, and cash flow from ops grew 12%. Okay, so they missed by a penny, and yet those other metrics are growing. I'm okay with it. Church and Dwight is a fabulous company. Shares have always traded a little bit rich, but that's the way it is for a high quality company. I would be buying on weakness on this one. This is kind of the opposite of Clorox. Clorox and Church and Dwight are, I'd say, very comparable companies. Both are good, and you buy any of these on dips. So this, Church and Dwight's the one giving you the dip. The other one's giving you the pop. So which one do you buy? You buy the Church and Dwight. Okay, BP joined its big oil peers exceeding estimates. This is awesome. Oil and gas have been left for dead by investors, including myself, and we are just starting to see some evidence that maybe they're leaning out. They've had such tough times. Oil prices have been low. Oil prices are creeping back up, but the companies are getting lean, and they're finally starting to exceed some estimates here. So I think some of these oil and gas might be opportunities here. It's a little early, but when a big guy can post that kind of a result and exceeding expectations, might be time to take another look. Okay, Snap, Disney, Anadarko, another oil and gas, and Electronic Arts report after the bell. Futures are up, pointing to a higher opening as well. So it looks like we're going to have a decent trading day to start. And that's your morning brief for Tuesday, February 5th.